The market had a very interesting Thursday, Friday last week. We had what's called a bearish engulfing pattern. Here's what you need to know before the bell this morning. This big red candlestick that we had on Thursday of last week completely covered up the whole market for the week. It was a very, very big reversal. We had a very strong open Thursday morning, completely sold off during the day. And this was on that headline over the Japan basically coming in and working with their yield curve control. And it kind of turned out to be a false rumor. And the next day we got the actual change to what the Bank of Japan was going to do in terms of their yield curve control. It was really kind of a nothing burger. And so the market has rallied back on Friday, but did not get back above, did not recapture that sell-off that we had. Now, again, this morning markets are looking to open up here a little bit, but we're getting fairly well extended. Again, we keep coming back to this one point, and this is the one thing that I just keep focusing on, and I know it's a little bit tiresome, but again, this is the thing we're talking about here. You're going to get a correction at some point. It does not mean, again, when you say a correction, that doesn't mean go panic sell everything and go throw everything into cash because, oh my gosh, Lance just said there's going to be a massive bear market. Not saying that at all. You are going to get a correction though, right? Markets can't trade above moving averages for an extended period of time because otherwise everything would just be moving up. And so the problem here is that we've got this very, very big deviation in the markets right now between what is going on in terms of the price of the market and, importantly, what is occurring everywhere else in the markets, which is simply this function is that we've got this giant deviation between the 200-day moving average and where the markets are currently trading. And now this can last a while, don't get me wrong. It can certainly do that. But importantly, when you have this big of a deviation, again, we talked about this before, moving averages act like gravity. And so the further that you get from that moving average, the stronger that gravitational pull comes to want to pull prices back down towards it. And this is just a natural thing because, again, if you think of what a moving average is, it's simply saying this is the average price over time, which means that prices have to trade both above and below that average over some period of time in order to have that average, right? So we just came from last year trading below that moving average, and so now we're trading well above it. And again, these greater deviations you have above these moving averages, the higher the likelihood you're going to get a correction back towards it. Now, clearly, that does not mean I have to go all the way back to and through the 200-day moving average. So I'm not saying that at all. You are going to get a correction back towards that moving average. And again, we have several in between that. You've got the 20, the 50, the 100, and the 200 below that. So there are plenty of levels of support as you head back down towards that 200-day moving average. Those are going to provide you a buying opportunity again, looking at the markets and talking about forward returns and all those type of things in the markets. The market's very bullish here, 90% of stocks above their moving averages, all very bullish, suggests that you're going to have higher rates of return over the next 6 to 12 months, but you're going to need a correction along the way in order to opportunistically put money to work within the market. So again, we're moving into 2 months here, August, September, typically weak months. That'll give you the opportunity that you're looking for. But pay attention to these moving averages. Those are the ones that are going to give you the best opportunity. Look for pullbacks to those supports, add exposure to the markets at those levels, and you'll have a better risk-reward opportunity going forward. That's what you need to know before the bell this morning.